Okay, so we're an overseeable crowd. I think we can, so if you guys have questions, you just ask me in between, and I think I can, maybe it's not bad, I can give you some more insights to what I'm doing and to the projects I'm running. On top, my presentation got lost, but that doesn't matter because I prefer to talk freely anyway. So I'm running currently actually four projects. One is a Digital Developers Fund. It's a Cayman-based investment fund that I started in 2009 that invested in domain names. And a year ago, I made an ICO with that fund and so moved to the crypto side. And the fund more than doubled since then, so it was a good move, and it was my first ICO. I mean, it was not a year ago. Sorry, it was half a year ago, but it feels like 3 years. Back then, it was very early on with ICOs. Actually, a friend of mine convinced me to make an ICO. I said, okay, well, let's try. You know, we had 3 weeks of preparation. That's it. Cayman Islands. Easy going with this, and we raised $2.5 million without pretty much any effort. So I was quite amazed about that. Yeah. In 2013, I can claim for myself I'm a very early investor in Bitcoin. Unfortunately, on the way, I lost all my fortune in Bitcoin at the MTGOX bankruptcy. I don't know, you might have heard of this. But there's a chance I'm getting it back now, a very small chance actually. But I was in 2011, I got first in touch with that. I was in Prague at the Bitcoin conference, and I was there with a friend, and there were like freaks, I mean like total freaks, like anarchists, Che Guevara shirts, they were just talking about world revolution, communism is back, and I was like, what the hell, you know, just get the hell out of here. This is not going anywhere, this Bitcoin thing. And after the conference, they said after the conference they got a sponsor, and they gave us back the 70 euros that we paid for the entrance in Bitcoin, which was 70 Bitcoin, and I deleted. So there went my first 70 Bitcoins. Then I invested after I got smarter, and then the other ones went at MTGOX. Then in 2015, after I recovered from the shock of MTGOX, I went back to Bitcoin. But in 2013, I went to Falcon Bank and I asked them to make a Bitcoin fund. No, not only to Falcon, I actually went to 10 banks, but Falcon was one of them. I mean, none of the banks wanted to hear anything about it, just said, no, this is nothing, it's just a game, forget it. Falcon called me up in 2016 again, said, hey, come back. We're a little bit late on now, but maybe we can do the fund. And actually now since January this year, January last year, sorry, confusing with the years. So since a year now, we are working on this fund. It's a Luxembourg, it will be a Luxembourg fund, a RIFE actually, managed in Luxembourg, with a custodian in Luxembourg, with a co-custodian in Switzerland. So it will be a structure that's fit for institutional investors, and it is aimed at institutionals with very low management fee, around 120% or something like this. So, and we hope that it's going to be launching in March, April this year. We have from the Swiss authorities, we're able to have 4 different assets now, Bitcoin, Bitcoin Cash, Litecoin, and Ether. But we hope we'll have many more by launch date. So if you happen to be an institutional investor, then you can come up to me or Ivo Sauter, he's also here and from Falcon, and he can give you some insights to that. The second ICO I made, that's another business, is Hydrominer. Hydrominer is, I'm into mining for now 2 years, approximately 2.5 years. First at home, then I realized it's getting too hot at home, not enough energy in the house. And I got together with some other miners in Vienna, and we decided to rent a little hydropower station. And we put our computers in the hydropower station, which has the advantage that, first of all, there's enough electricity. And usually electricity price is the price of electricity, and then the grid cost. And the grid cost is pretty high, it's 7 cents. Electricity can start at 3, 4, 5 cents. And we equipped the first hydropower station that worked well. We took in some investors, we took another hydropower station, a much bigger one, and another one, and then we thought, okay, actually we want to mine for ourselves and not for private investors, more fun and more rewarding. And we made an ICO. Unfortunately, at that ICO, we got stopped by the authorities, which we tried to sort of evade with this ICO, which was not the best idea. So the FMA, the Austrian authority, stopped us. We had to change the model very quickly because we already spent money on advertisement, and we had to give back the money from the pre-sale. But we were still able to raise $3.5 million with a voucher. Which is also a little bit challenging. Starting then, we already knew we were going to make another ICO, and that's what we are doing now. And we came up with a new model because usually you have actually you have 4 types of assets in crypto. You have the mineable assets, Ethereum, Bitcoin, the big ones, the no ones. Then you have vouchers, which is basically the worst because it's a voucher. It's like an Amazon voucher. Then you have utility tokens, which in a way seems like a good idea if you have a really good infrastructure where you can use it. I'm a little bit skeptic about it because like you come up with a great business model, but usually business models change, and then what's going to happen with your utility token? Maybe it doesn't fit the actually working new model, and then the utility token is going to go down the drain. So I think it's super risky proposition. I mean, maybe others can pick the token up to use it for something else, but then they didn't get the money from the ICO, so why would they do it? I'm very skeptic about it, but okay, it's fair enough. And then security tokens. And the actual security tokens, and it's funny, are usually dividend tokens, which in my opinion is like, it's nonsense. I mean, these are all startups. And the only companies that usually pay dividends are like the Nestle's and the BMWs and the bigger companies. I mean, Amazon, Facebook, these young companies, you don't pay a dividend. And especially, you don't pay a dividend at the expectation that people have in this market, because they want a dividend of like 500% per year, 1,000% per year. How much dividend can you pay, possibly, to make these people happy? Yeah? So you'll have to make a promise that's completely absurd. And we thought, okay, let's do something else. And it's we're already done with the discussions actually with the regulators. So we do a tag-along token. So it means you buy, you don't have a stake in the company, like with all these security tokens. But when we sell the company one day, then the token holders will receive the actually larger part of that money. So you really have a stake in the company, and you will be rewarded when the shareholders make money in the sale or whatever they do. And I think it's a good proposition because I have seen there's a lot of scam, but there's also scam on a higher level where you have a company, a real company, which is already like the super duper ICO when you have an existing company, and then they take in the money and then they sell off the company to some, I don't know, some guy from I don't know what country who doesn't even know about it, and it's gone. And there's a couple of those, so I thought it's a good idea to make it this way. But Hydrominer also taps into this energy discussion, where people claim that the validation process of Bitcoin and Ethereum uses up all the energy in the world, basically. Or right now they say the amount that I think Croatia is what they say is used up in energy. So I think I'm pretty knowledgeable when it comes to mining and energy because I have to calculate it all the time when I take a new hydropower station, and it's nonsense. I mean, as a matter of fact, all the mining together of all the GPU assets, so altcoins, and all the ASIC-based ones, so Bitcoin Cash, and so on, uses approximately as much energy as 2 larger nuclear power stations. And this is not so much because the biggest nuclear power station, which is in France, it's not going to be among the 100 largest hydropower stations of the world, because like what's called the big dam in China, where they like displaced, I don't know, millions of people, is like 25 times stronger than this nuclear power station. So it doesn't use up so much energy. My feeling is more that it's kind of smearing cryptocurrencies, because usually the argument of resources always comes up when you don't like something, okay? When you're against Formula One racing, you say, oh, you know, so many people are polluting the air by doing this, or you don't like, I don't know, traveling or whatever, or ships or whatever. And then also always this resource thing comes up. But I mean, everything needs resources, and there's no lack of energy in the world at all. I mean, we are constantly, we have an advising company, Puri. It's one of the largest, actually it's the largest advisor when it comes to energy. And they tell us like there's thousands of power stations that are planned and nobody builds them because there is no need for energy right now. So it's a non-problem, but it's part of a policy that already starts, and it's all over to, you know, always talk about the drug trade with bitcoins and terrorism and whatever. Okay, so still, we have another product for people who are into the ecological side of crypto, and that's actually, we are part of a fork, of a Bitcoin fork. And I think I will maybe tell you what the amazing proposition is if you make a fork, because it's an amazing, from a business perspective, it's an amazing proposition. And people have done it. I mean, there's big forks, respectable forks, like Bitcoin Cash is like #1. People claim Bitcoin Cash is the actual Bitcoin, and okay, I would maybe support that, but it doesn't matter. It's an ideological discussion. What is Bitcoin Gold and so on? So what you actually do, I don't know if everybody knows what is a fork? Yeah? Okay, so on top...
We talked about it the first day.
Okay, wonderful. So I wasn't here. I slept probably. Okay. So what you do in a fork, usually you mine for yourself, okay? So either you mine right after the fork when nobody else is there to mine your asset. There's a couple of ways to do it. And the Bitcoin Clean, which is this fork, bitcoinclean.org, they mine 500,000 coins in advance, and they have amazing support. I cannot tell you, but they have like people from Hollywood that support that fork. So they are marketing-wise, they're very well organized, and they already now, like among friends, trade the coin for $100. So already now, they actually are at $50 million valuation, whatever that means. I'm going to talk shortly about that too. But this is just a protocol. So you don't actually have a company. You don't have an entity that runs it. There's no taxes or anything involved. This is very informational, I would say. And if it goes up to, I don't know, $100 or $200, you can calculate yourself what kind of business it is for those people who hold those 500,000 coins. I mean, they have to spend some on marketing, obviously, but... Can they be bought already? Yeah, I mean, they can be bought, but really it's just a handshake deal. Because, I mean, I bought some earlier, but really it's just a handshake. I have nothing in my hand, just the trust that after the fork, when the fork works and they don't get screwed by the company that actually programs the whole thing for them, they have the coins and they transfer it to me. That's it. So it's really not for, if you want a written contract, forget it. This is not for you. Then, but okay, it's high risk, but it's also very high reward. So I was in very early, and I paid $5 for the coin. And now it's somewhere between $50 and $100. They trade them now. I mean, there's a team in Russia, a team in China. Hydroman is a little bit part of it. There are Canadians that are part of it. It's maybe 30 people, 35 people involved. So yeah, so it seems like a good Well, okay, sorry. Good point. So, sorry. The idea is this. In order to mine Bitcoin Clean, there is a whitelisting process where you need to prove that you are using renewable energy to mine the coin. So you will be only able to use hydropower, or actually it's not about hydropower. That's why we learned about it, because wind and solar is not really suitable for mining, because you need 24 hours of energy, and it doesn't work with wind. And with wind it can work in certain places, but usually it doesn't. So, but that's the proposition actually. And so far, there's very good feedback, because the people are so concerned over this energy thing. It's crazy. I mean, also maybe at Hydro Miner, our idea was not initially to save the environment. I'll be honest with you. The idea was to have cheap energy. Austria is full of hydropower stations, so it's just an hour from me. There's a lot, and that's why we went there. And then we realized people react really well to the idea that we have a clean mining proposition for them, and we offer mining contracts, and people pay a premium because it's clean energy. So okay, so of course we are. Yeah, I mean, if the market wants that, we'll provide it. Yeah, that's the proposition. Yeah, so these are the main projects I'm running. And maybe I just want to give you some thoughts that in the course of my work that I see and that are somehow funny or interesting. And so first is the thing about market capitalization. Yeah, this is the thing that every investor constantly looks at. Okay, what's the market cap of that coin? What's the market cap of this coin? And in a way, it's the only thing that you can track on the coin. Pretty much. I mean, you have news and so on, but that's the number you track. And in one way, we all feel, okay, that's nonsense. I mean, like, what does it say? It doesn't say anything, because 100 million coins might be somewhere in a wallet from the owners, or they might get burned later or not. We don't know. Some of them are just circulating. You have no idea. But still, this is the only number you have. And then people like from the investment community say, okay, but look, in the stock market, it's really, really sophisticated, because you got interest rates and you got price earnings, yeah? But in a way, that's also a little bit arbitrary, right? I mean, why is in the Bible it says, okay, you have to pay 10% interest rate, actually. You have to give 10% to the poor. Why 10%? Why not 11 or 15 or 20? So you have to come up at some point with a number where you feel in market capitalization, maybe, okay, that's the right ratio between market capitalization and turnover, maybe, okay, of how much is the daily turnover in a coin. And at least you could make a medium of all the coins, maybe leave some of the shit coins by side, but of the top, whatever, and start to have an analysis of the market. Because right now, some of the volatility, and this is another topic I want to talk about, comes from that people have no way to have a feeling which one is overvalued, which is undervalued. And yeah, I mean, I'm not going to do it. I don't have time, but maybe somebody who sees the video, or some of you may want to pick it up. I think people will love it to see, okay, that's overvalued, that's undervalued. And it's, I don't know, nobody, not many, not nobody, it's not true, but not many people think about it. And in the stock market, it was the same. At some point, someone said, well, for a car company, a PE of 10 is fine, but Google is 60. Yeah, okay, why? But okay, fine, that's what we agreed on. So that's the market cap thing. The volatility thing, and there's confusion, I think, and that's a really important thing. I'm running a project which is more like a group of people who think about the next step of crypto currencies. It's actually called crypto credit currencies. It has to do with tokenization and so on. But I think there's a fundamental misunderstanding sometimes of how the money, the actual money now, is what the composition is. Because a lot of people think, okay, it's fiat money, the central bank prints it, and that's it, and we have to trust it. It's not like that, actually, because most of the money is actually credit. So you want to finance a house, you go to the bank, and the bank produces money, but it holds a collateral on your house. So it's not like this money is just printed out of thin air. So most of the money is that. It's collateral against credit. And then there's central bank money, which is kind of the shit coin of the fiat system, because the central bank just inflates on top with their money. But that's a much smaller part of the whole money system. And I think so. Part of the volatility, or let's put it the other way around. Part of the non-volatility of the known currency comes from exactly this: that there is actually millions and millions of houses and cars and machines and whatever which are collateral to the credit or to the loans that have been taken in euro, dollar, and so on. And that's why it doesn't move so crazy, because it's not like all these houses have no value tomorrow, or are 60% down and today they're 60% up. It's not like that. And even if, it's still it's the same currency. So yeah, if they're 60% down, then it doesn't matter. Then that currency would just change versus other currencies. So I think the next step, logically, would be crypto credit currencies. So you have an asset on a blockchain, your Tesla car that can be controlled actually from afar. It can be blocked. You cannot open it anymore when you don't pay the leasing. And you could use public ledgers also for real estate and so on. And that will be the logical next step, to create very stable crypto credit currencies. And unfortunately, I don't have this slide because I had the composition of money here, but I have it a little bit in my head because someone was speculating about how high must Bitcoin go in order to replace gold. So actually, I think today, what's the market cap? It's half a trillion. I didn't follow it now. It was 700 before the drop, so maybe it's 500 now. Let's say 500. So total gold in the world is 7 trillion. So in a way, we're not so far away. I mean, like, we tenfolded this year in market cap, almost. So when we tenfold again, then we're almost at the level of gold, or we are at the level of gold. So I think it can pretty soon be larger than gold. But credit is 300 trillion. So you see that's also why currently maybe regulators or central banks are not so concerned with Bitcoin, because that's more like gold, and it is like gold because you mine it. It has a lot of features that gold has, but they would be very, very concerned when you come up with a credit currency, and that's why I think these tokenization models are super interesting. But I don't think that the regulators are going to let that really happen. I mean, in fact, it's funny because what we say constantly is, okay, the banks are so clumsy and so complicated and they're horrible, and we want to replace the banks with crypto. My time is off?
Soon.
Okay. I'm
towards you, don't worry.
Okay, I'm finished in a second. So what that's the constant proposition. Okay, let's replace the banks. They're so bad, but they're bad mainly because of regulation, because they have to follow so many regulations. If the banks would be completely free, they would work, I think, much better. It would be much cheaper. And now what we do with Bitcoins and cryptocurrencies, we go ahead and say, okay, we're going to regulate this whole thing, but then it's going to become super clumsy because the technology of blockchain is not great as a technology. I think it's a structural change, not so much a great technology. So I will be careful with this idea of we should regulate it. I think it's going to be a fight at the end. Central banks against private money. Okay.
Thank you so much, Michael Marcovici.